Enterprise Product Partner Stock, or as most people know them, EPD Stock. This stock is up 12.6% year to date, underperforming the S&P 500, which is up 17.7%. EPD stock reported an EPS of $0.67, in line with analysis estimations. Revenue was reported at $14.8 billion and beats the estimations. Within a week, they will report the second quarter earnings. It is expected that they will beat the estimates. People love EPD stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 7% and 25 consecutive years of dividend increases, making them a dividend king. If we look at the total returns in the past 5 years, we see that EPD stock underperformed the S&P 500, and this is including dividends. So could this be the perfect time to buy EPD stock? Well, by the end of the video, I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does EPD do? Enterprise Product Partners is one of the largest midstream companies, with operations servicing most producing regions in the lower 48 states. When we dive in the investor presentation, we see that EPD is a diversified company in terms of geolocation, product and markets. A thing that is very impressive are the 25 years of consecutive dividend increases at a 7% compound annual growth rate. The CFFO payout ratio is at 56%, which is pretty nice. Another thing that I really like are the A credit ratings and return on invested capital. That last one is really impressive with 12% over the last 10 years. Both the EBITDA and leverage ratio are developing very nice over the years, although EBITDA is slowing down a little bit here. A very important opportunity for EPD stock is the massive power demand for the data centers in the coming years. It is expected that this market will grow big time in the coming years. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. EPD stock is a 65 billion market cap company. PE ratio is at 12, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for EPD stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on EPD. Revenue is at 52 billion and in this graph we see that revenue went up and down quite a lot. This is also very common for a company in this industry. However, I always prefer a bit more steady in pattern here. The good part is that it is increasing again. Margins are going up in the long run, and this is really important to me. With revenue being a roller coaster, you want the margins to increase at a decent pace. EPS is looking pretty good. In the long run, it is going up, and I must say it is pretty consistent. Analysts expect that EPS will only increase a small amount in the coming years, mostly because of 2 analysis projections in 2027 and 2028. For the revenue analysis, expect 57 billion in 2028 with a really slow growth pattern. Return on assets is sitting at 8%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 11%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.92, which is a decent number. Nothing really special to mention here, to be honest. And right now EPD has 30 billion in debt. I prefer companies that can pay down at least a big chunk of the total debt with the total cash. EPD has 283 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. And to be honest, this could be a potential red flag to me, since it is really out of balance. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. However, it is not really steady and consistent. But in general it looks good to me. Recent increases are a fluke in my opinion. Shares outstanding are increasing, which is something that I don't like. However, companies like EPD increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7%, which is an insane number. Annual payout is at $2.10 and payout ratio is at 79%. I prefer 50% or lower. So right now they have 21% left in cash to buy back shares, pay down debt, do acquisitions and all other things. But as mentioned earlier in the video, the CFFO payout ratio is at 56%. So things look pretty good to me. The 5-year growth rate is at 3%, which is a low number. But since the dividend yield is already at 7%, I don't mind that much. On top of that, they have increased the dividends for 25 years in a row, which is very impressive, making them a true dividend king. And if you take a look at these numbers, the dividends paid since 2014, you see that EPD did increase the dividends at a slow pace. However, in the long run, this really adds up. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is decreasing, which is a good thing. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at a similar rate versus previous numbers. And overall these dividends look really good to me. But how about the historical returns? I decided to compare EPD stock with the overall market, in this case the S&P 500. Next to that I added WMB and ENB. On the 5-year chart we see that EPD and ENB underperformed the S&P 500 big time. However, WMB really outperformed the S&P 500 with a significant difference. And keep in mind, this is including dividends. On the 1-year chart things look pretty similar, with the S&P 500 having a 24% return, while WMB is again the big winner here. On the 6-month chart it is again WMB that is having the highest return. This time EPD is almost matching the S&P 500 in terms of returns. On the 1-month chart it is finally EPD and ENB beating the others in this list. Bottom line, WMB was by far the better investment over the past 5 years, but most recently EPD is finding some momentum. So, could this be the perfect time to buy EPD stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 10.5, 11 and 11.5. For the free cash flow margin, I'm putting in slightly lower numbers. For the PE ratio, I'm putting in 9, 10 and 11. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, EPD stock is around $30. I hit analyze, and we see a lot of red numbers. We have a low price target of $21 to $23. We have a mid price target of $26 to $28, and we have a high price target of $33 to $35. And to me, the mid to high price target is the most justified here, meaning The stock could be undervalued according to these numbers, and this kinda surprised me a bit. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on EPD stock is that it comes with a few risks. Of course, you have the industry risks that are attached to this company. Next to that, debt levels don't look any good, and this is a red flag for me right now. The fact that they can increase the margins at a pretty decent pace is something that I really like. Dividends also look really good, a high dividend yield with even some small growth and 25 years of dividend increases. From a value point of view, things don't look bad there either. However, the stock isn't massively undervalued. So it really depends on your play if EPD stock is a buy right now. So I will keep waiting for the stock price to come down to have a better valuation. Until then, I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.